IBD 50 ETF up 6%, followed by last week's gain of another 5%. David, would you like to comment first of all on what you see with this chart in growth stocks, as well as give us an update as to how you're handling your portfolio?
Well, yeah, you've had some nice moves in some technology stocks over the last couple of weeks. My portfolio hasn't changed that much. I'm still underinvested, 40-50% invested, because a number of the stocks, and when we get into the groups, I like retailers. Some of the retailers have fallen off, and I don't have as much technology. But if those are working and you're in them, then just stay with them until you start seeing some distribution or some stalling out. But a lot of those have had some very, very nice moves, and it's interesting. I mean, even if you look at the relative strength line of the FFTY, going back long term, it has underperformed for a long period of time, and this is really one of the strongest performances it's had in the last couple of weeks. I think even if you take it all the way back to the inception, that this is actually, if you do a comparison against the S&P, it has underperformed the S&P 500 since inception. So as put in the S&P if you see. So it's this is only going back 1 year, so it's actually outperforming now for the first time. But
taking it back further to September of 2015, how does that look, David?
Well, it looks fairly good, but when I go to the website, it still shows underperformance since inception. Wow. So, but it's a great list to go to be able to come up with some ideas and see if things are setting up and what they look like. So, but yeah, the group I want to highlight going forward is, and maybe when we get into the group rankings, is the shipping seems to be setting up the best of all the groups that I see right now. There are a lot of stocks that are extended, so you have to avoid those, but I'm always looking to what's going to start moving next.
Do you still have a position in MATX, Matson? Because you've talked about that one on the show.
I actually sold Matson because I thought it was getting extended, but it has continued higher, and I've moved over to the SBLK.
SBLK. Okay, we'll cover that right away. I just want to highlight here, David and everyone, that this comparison chart goes all the way back to April of 2015, and I think that's around the time that FFTY got started. And just like what David said, there is still a fragment of underperformance here. You can see at the top left corner, over the same period, FFTY up almost 113%, and the S&P up 117.5%. Chris, any follow-up comment on FFTY or about the market in general for you?
Well, I just think that especially last year, where the market was so focused on sales growth rather than earnings growth, and so that's why, and actually that started in the beginning of 2019, I think, where we started seeing a divergence there, because in 2017, where we had a very steady upward market, it was the best performing US ETF, and it was all because the growth was in favor and was capturing it all. And so the market has kind of shifted, and actually we changed some of the elements to it to capture that sales growth. So I think in some ways that's why it's starting to outperform, because we've saw big moves last week, and with individual growth stocks, not so much the market, and it really captured those moves. So it's kind of now when growth is in favor, it seems to be capturing that activity. As far as the market, it's not too extended from the 50-day moving average, like a little over 4% on the Qs, but we are just kind of inching up, and you're not making a ton of money from the market. It's got to be the individual stocks right now.
here is the QQQ right here, Chris. And just like you mentioned, as of Friday's close, 4.3%
Mhm.
above the simple 50-day moving average. Let's head over to SPY, representing the S&P 500. And Chris, pretty much the same story. In fact, even
Yeah.
less extended.
Yeah, so it's the market's not extended, but it's just in this, it's taken baby steps each day, and maybe a little ahead or a little behind. So
let's also take a look at one of our favorite charts here. Chris, stay on the line here, and then we'll ask Ed for his comment on the market. But still with the regression channel in place, the left side anchor, I believe it's still, at least on my chart on Thinkorswim, April 2nd, 2020. That was the follow-through day, in fact, last year. And then the right anchor on November 11th, also in 2020, around here. This regression has really held its own. It's pretty impressive, and we're still below the center line, Chris.
Yeah, it's heading higher. What's interesting is that the rate of ascent for the S&P did not change. It was and it was underperforming last year when the NASDAQ was just on fire. And so it's been very hard for us to find a meaningful regression channel for the NASDAQ since it slowed down. But the S&P continues to be, just climbing higher. So it is what Justin and I noticed by looking at other strong uptrends. When you get into a situation where it starts living below the center line, doesn't mean it's done, but you need to be on the lookout for a break below it. And we saw that in the NASDAQ too, last fall, I think.
Well, also, in addition to what Chris is saying, I do want to highlight that we continue to actively edit the live exclusive ready list, which has now been pared down to 36 names. I'm eager to ask Chris about which ones you took off, because I think we were getting it was getting a little hairy over 30, 40, 50 names. But the watch list is still quite full, if you will, 231 names on that list, and we will definitely highlight some of the most active ones. Ed, you had already mentioned to us that Netflix, NFLX, that one's breaking out, and let's take a quick look at that. I think your comment about how you've got BYDDF and COOK, Cook, and Dash all moving kind of reflects a still mild range of leadership, don't you think?
Yeah, I mean, it's a little unfortunate. The leadership did seem to narrow last week a little bit, or last couple of weeks. Steel sort of backed off. I mean, they're not terrible. Maybe just out of favor for a little bit, financials and industrials. But it'd be nice to see that broaden out. Netflix, I'm not sure if I really like the look of this. I mean, there's been some volume, so I don't want to discount that, but I don't like things straight up from the bottom. I suppose I would have been better to buy it off. That was a good day, but it's like, man, it would have been tough for me to buy it. Maybe a few days later when it sort of broke above 557 or whatever that area is.
Right.
It's just been tough. And also, I think there's just the wariness at this point. If you look, like if you go to a weekly, you'll see this stock has gone sideways, and it makes these big moves to record highs, and then it tanks. It isn't just it inches up. I mean, it's had some nice gap ups and other stuff. So that just makes me wary. Now, maybe that's also, here we go, because now you've got people like me going, oh, gloomy Gus Ed is saying not to buy it on, and then a wall of worry and everything's fine. So I don't want to, it could easily work. But it's just that character. This is also where you want to buy early. And I didn't feel super confident buying early on this one. And now it's at highs, and that I don't really want to do that with this one, but it's made some high volume moves. But anyway, that's how I feel about it.
We'll definitely cover some of the others, including Dash, DoorDash. Cook is, I don't remember what that one is, but maybe that's a new IPO as well. But let's go to the shipping companies, SBLK. David, why don't you come back and share with us your thoughts on the current weekly chart action